Let's get back to the uncertainty in Italy. It's dragging on the market this morning. Joining us now, Brian Wesbury, First Trust Advisors Chief Economist. Brian, how concerned should we be? It wasn't long ago that, we had the whole situation in Europe. We were watching Greece every single morning to determine where our markets would go. And Italy is a much larger economy. But, what's happening there could have a major impact on Europe for a long time.
Well, it could. I mean, we all remember Grexit. And then Brexit. By the way, Britain's a lot bigger than Italy, and now we got who knows what with what do we call it with Italy? But what we're seeing is a backlash against the establishment. It's happening around the world, and the reason is big government doesn't work. When you have the commanding heights of the economy controlled from the centers of political power, what happens is there's backlash, and that's what's going on in Italy right now. It's confusing to a lot of people. It's obviously concerning to people who own Italian debt because Germany backstops a lot of the debt in the European Union. Right. Italy has a lot of debt, and if they go it alone, there's going to be some bondholders that get hurt. But that's true in Illinois. It's true in California, New York, New Jersey. There's a reason there's a backlash against the establishment, and that's because there's massive fiduciary mismanagement at the government level. And so the point is that this is going to happen. But just like Brexit, just like Grexit, I don't think this is going to affect the U.S. markets. What drives stock prices over time is profits, and U.S. companies are highly profitable, and as a result, they're going to come back.
But by the same token, though, in addition to the sort of the big brother, big government issue, there is an issue that translates across the Atlantic, and it's the sense that you have a group of people who seem to be working the hardest, generating the most capital, funding the government via taxes, and another part of the population who seems to be unwilling to work, that seems to be getting the majority of the welfare. And it's not just in Italy, it's in Belgium, it's in Spain, and it's in Austria. And all of these places, you now have people who are so fed up, they want to go it alone.
Yeah, they do. And this battle between wealth creation and redistribution, Charles, if you will, it's the history of mankind, right? I mean, we've been doing it for hundreds and hundreds of years. It's just that in the last 30, 40, 50 years, especially with the EU and Brussels and the growth in the U.S. government, we've taken it to a new height, and now we're seeing a backlash. People are going to find out you can't not work and still get paid. I mean, I don't know. There's still a lot of people
but it's happened for a long time in a lot of places, and it's really the crux of a lot of issues in this country. Let me ask you another one, Brian. Oil, because it's been getting hit pretty good now. I was on over the weekend with Neil Cavuto, and I said people should start thinking about oil as an American product, and I got some backlash on that. But there's a double-edged sword, though. I mean, we don't want oil to go down too far, do we?
No, we don't, and it is an American product. I mean, we are the world's leading producer of energy in the United States. What I find fascinating, just a quick aside, is that Merkel is still willing to make deals with Putin when we could provide all the energy to Europe. They don't need to deal with Russia. But let's leave that aside. I believe that oil is worth 55 to 65 bucks a barrel. I thought that when it was 110. I thought that when it was 28. And the way I get there is I compare oil prices to 35, 40 other commodities. You could build a big spreadsheet and you start doing all kinds of ratios and averages and statistical work on that. And it says oil's worth that. So whenever it gets above, there's going to be pressures to bring it down. Whenever it gets below that, there's going to be pressures to bring it up. And at 55 to 65 bucks a barrel, we're going to frack like crazy in the United States. We're going to continue to produce, and we're going to produce even more of the world's oil in the years ahead.
And we'll also produce a lot of great paying jobs. Brian, you're one of the best. Always appreciate it. Thank you.
Hey, thank you, Charles.
All righty.